For those who started investing in January 2025 in Mansa X, your money is now unlocked, true? And you already earned about 11.15% returns in just 6 months. That means if you invested around 1 million Kenya shillings, you're looking at 1,100,000 Kenya shillings in your account. How are you feeling right now? If you did invest, let us know in the comment section. What is your next move? Are you planning to diversify or maybe to add more into the investment, or you're planning to withdraw your investment from these investments? Let us know in the comment section. Today, we're starting this video in a very high note, and I want to make this video worthwhile for both the investors and also for the beginners. For the beginners, we are looking at everything that you need to know before you start investing in Mansa X. And for those who already invested in this, those are the investors of Mansa X. Do you evaluate SIB financials, or did you just invest and forget and don't know how the company itself is doing? Did you do your due diligence on the fund manager? Today we'll talk of the financial health of SIB, because we said that you can actually lose money in this investment if the fund manager went out of business. But how will you tell, or how will you see the signs if you don't check how they are performing or how the SIB is performing? So that is part of this video, so make sure that you stay tuned for that. Welcome to Study of Wealth, where we are guided by the philosophy that you have to study to become. We have to study wealth to become wealthy. My name is Susan Juguna, and here we discuss everything finances with a goal to attain financial freedom. That is, having money working for us to sustain our lifestyle. If that's something that interests you, make sure that you hit that subscribe button. Okay? Now, I would like us to start this discussion of this video with a simulation. This is Susan. Susan invested 1 million in Mansa X in January. After the first quarter, she received a return of 4.89%. So her money grew from 1 million to 1,048,900. Okay? Remember, Mansa X does quarterly compounding. So this amount was used to calculate the returns for the Q2. So now, for quarter 2, her returns grew by 6.05%. Now her investment grew from 1,048,900 to 1,111,447.45 Kenya shillings. That's over 111 Kenya shillings earned passively in just 6 months. So in 6 months, that is a return of plus 11%, which is compounded. This is better than what money market funds are giving in a whole year. And remember, we still have 6 more months to go. And so that this can make more sense, let us annualize these returns. We are looking at 23.65% annualized return. Now, the next big question is, how safe is your money? How safe is your money when you invest with Mansa X? Now, I want to take a minute to explain how Mansa X works before I show you my illustration of how they manage the risk after you invest in Mansa X. So this is how it works. After they collect money from different people, from me, from you, from 100 others, they take that money and invest in things that are shown in your screen right now. When investing in these things, they take a portion of the money and invest in each of the items shown. This is what we call diversification. And this here in the screen is how they distribute the money they collect from investors. And guys, this is the top 10 holdings. They have another portion invested somewhere else, as I'm going to show you shortly. All right, now to understand the risk, let us see how your 250,000 Kenyan shillings will be invested, so that I can illustrate how the risk is managed. Now, from this, you can see that they will take your 250,000 and divide it or distribute it in different assets. And you can see here, they're going to take 33,350 and put that in a fixed income instrument, all right? The other 12,800, they're going to put that in interest rate derivatives. 6,775, they are going to put it in crude oil. 4,725, they are going to put this is in Netflix Inc. all the way to cash and cash equivalent. And I know we have a portion that is 169,625 that is not in this list. So these they put in other assets. As we mentioned, what they have listed here is the top 10 holdings. So the other 169,625 they put on other assets. Okay, now let us discuss how this mitigates the risk of your investment. Let's say maybe Oracle Corporation did not do well this quarter and you lost everything in that market. You lost everything that was invested in that particular market. Now this would mean you would only lose 4,150 Kenya shillings in this particular investment, and it's not really a loss, because so long as another investment does well, let's say maybe Gold Futures returns a 1%, and maybe another investment like Nvidia did another let's say 0.9%, and maybe Microsoft did 1%, it means that you already in profit because the Oracle was only 1.66% of your investment. So all they need is to make sure that a few of their investment of their other investment do well for them to report a return in this particular investment that you have made. Okay, so does this mean you can never ever lose money in this particular fund? The answer is you can actually lose money in this fund, but in very rare occasions. Such occasions are maybe mismanagement of the funds by the organization, if the company went out of business, or if the professionals do not do their work well. Because remember, this fund, requires professionals to spot opportunities, to analyze the market, and to identify opportunities or identify areas that they can actually invest your money to make you good returns. So if they are not able to do this, then it means that it's going to be affecting the returns that you are receiving from this investment, or maybe your investment or your capital in the long run. So for example, if the company went out of business, and by the company we are meaning here SIB. If SIB went out of business, it means that your fund, unlike money market funds, which are maybe direct, or if something happened to the fund manager, they are going to liquidate your funds and make sure, or they are going to transfer that the managership or the fund manager role to another fund manager. But for a special fund, because they require specialized, or they require professionals to do that, it means that it would be very hard for them to transfer the fund managership or the fund manager role to another fund manager. So it is very important that the professionals, they know what they are doing and they do their work well, to just analyze the market, to direct to where the money should be invested, and to make money for you. So how do you mitigate this risk? If you are an investor, make sure that you're looking at the SIB, that is Standard Investment Bank Financial Health. Do this every year, so that in cases where the company financial health started declining, you'll be on the know and you'll be able to evaluate your investment. For today, I made your work very easy, and here is a summary of their audited report, and I will leave the link in the comment section, pinned comment, as well as in the description, so that you can maybe go into details on these financials to just make sure that the financial health for SIB is good and you're comfortable actually having your money with this particular fund manager. Okay, so make sure that you keep assessing the financials if you choose to invest, or if you're already an investor with Mansa X. Also, this is where I tell you to make sure that you subscribe to this channel, because I will always keep you updated in such matters. Something else very important, make sure that you reevaluate your investment with time to make sure that it aligns with your investment goal. This is very important, because sometimes you can have too much in a single investment, forgetting that every investment carries some level of risk, and it's always good to diversify investment. So make sure that you, as your account grows, make sure that you are re-evaluating your investment to, to fit or to align it with your initial goals. I'm very sure that when you got in, you had some goals in mind. You wanted your account to maybe to grow to a certain level, or you wanted a certain, you had a certain goal when you are going into this investment. Make sure that you, at all times, you are evaluating your investment to just align it with your investment goal. Okay, And I also think it's very important for you to know that this Mansa X is not guaranteed return fund. I know that I've mentioned this, but I would like to emphasize this. This is a moderate to high risk investment. It's rated at 2, and this is because the fund do active and leverage trading. This is just forex trading, and they can make losses sometimes. So the returns are not guaranteed, neither is the capital, but as we mentioned, their model is very good to make sure that you are earning something, and the active tradings allow them to make money in both the downtrends and also in the uptrend market. But the even better news is that they have been consistently making profit since the launch of the fund in 2019. But like all investment, there is always a risk involved in all investments. So make sure that you don't invest money you cannot afford to live there for three months and above, or 6 months and above. Make sure that you do that. Also diversify. Don't put all your eggs in the same basket. Make sure that you diversify at a personal level, and then learn your risk profile before jumping in to this investment. And I'm going to leave you, the last thing that you'll do in this video, I'm going to leave you with the disclaimer so that you can go through it and you see who they advise or who they encourage to invest in this particular fund. That being said, the fund manager for this investment, we have mentioned, that is SIB, and the fund itself, that is Mansa X. They are regulated by Capital Market Authority, which makes sure that they are in check and they are operating within the guidelines. But you also have to enroll to make sure that your investments are protected. The fund has a 6-month lock-in period. After investing, you'll not be able to withdraw your money until 6 months are over. They charge a 5% fee, that is management fee, and when they report their returns, this fee is already deducted. So when they say 6.05% quarterly return, that is minus the management fee. They also have another charge called performance charge, that is 10% on the amount above the handle rate, and the handle rate is 25%, meaning that anything that they give you above, if they give you a return above 25%, they're going to charge you 10%. And I'll give an example. For example, today they return a 30% on your investment, and the handle rate now, because it's 25%, the performance fee would apply only on or to the 5% that is above 25%. So that is 30% minus 25%, you get 5%. So they'll be charging 10% on the 5% above the handle rate. Okay, I will leave you with this disclaimer here, as I mentioned earlier, from Mansa X fund fact sheet, which explains who is suitable for this particular fund. And if you're interested in investing in Mansa X, you can kindly reach out to me through this number 0706 65 1438, and I will connect you with a relationship manager from Mansa X. I will leave you with this disclaimer here, as I mentioned earlier, from Mansa X fund who you can be dealing with. He will direct you on how to open an account and answer your question in regards to this particular account. And of course, I have a question for you. Now that the Q2 returns are out and you have seen the numbers, what would you do differently if you would go back to January? And more importantly, what will you do now that you know this? Let's talk in the comment section. If you'd like a simple breakdown of different funds like Mansa X, or want to help figure out where to start, make sure that you follow me for more. Thank you so much for watching. Happy investing, and bye. See you in our next video.